Let's talk some stocks. Zooming in on Snowflake after initiation by the coverage at Macquarie. Shares holding on for the ride today. Caroline Woods, what are they saying in this note?
Hey there, Oliver. Yes, shares have been both higher and lower, modestly lower right now, but have been bouncing between 149 and 151 as I've been waiting to go live with you. Macquarie taking a cautious stance on the company with this initiating with a neutral rating and $160 price target. So Snowflake currently trading around 149 here, as you can see. So that implies about 7% upside from current levels. Things that the analyst over at Macquarie likes: the company's core cloud data warehouse opportunity, product differentiation, market expansion opportunities, and Snowflake's disciplined execution. However, this analyst sees a number of risks or headwinds as well. Those include what they call a more aggressive fiscal 2026 product revenue guidance, which offers limited room for upside, competitors' AI positioning, noted growing competition from companies like Databricks, and then macro pressures as well. Thinks that the company's consumption-based revenue model could face some pressure if economic conditions tighten or worsen. So the positives and negatives sort of balance each other out, and hence a neutral rating from Macquarie. Should note that this analyst going against the grain with this call, or kind of not in the majority here. If you take a look, about 78% of analysts rate Snowflake as a buy. Only 20% are in the hold camp, and then there's only one sell rating on the street, so not a lot of bears out there. The median price target is $212.50, so quite a bit higher than Macquarie's 160 price target. That implies more than 40% upside from current levels. Just to put that in perspective, Snowflake about 23% away from its 52-week highs, down about 3% year to date, down about 4% over the past year. Modestly higher right now, and up about 2.4% so far in April. So second day here, and it's an April winner, but otherwise lower across the board.
Okay. You know, the group has been a little disappointing this year, but when you pull back on the longer term chart of cloud stocks, they're generally trending higher. So Snowflake trending more sideways has definitely been disappointing. They did have that big ramp up at the end of last year. That last report, markets seemed to love. So we'll see if we can get back to that, but that's a question for a couple months ahead of us, given the earnings from last time also led to some brief glory before more selling. So it's just been a very rough trade. I don't think anyone's going to get too excited about a price target of $160. I hate to say it. When you're at 150 and the stock's been under pressure and chopping around for years, I don't think anybody's getting too excited about 160.
No. And it's also a neutral rating, which
right, yeah.
Obviously is more cautious or staying on the sidelines. I was taking a look. The highest price target on the street, a REIT research, $440 a share. So you might get excited about that. But otherwise, the next highs are in the 235 range. So, the median also quite a bit higher than where it's currently trading. As I said, more than 40% upside. But no, I don't necessarily think that if we see a bump higher, it's from this price target. And Snowflake sort of chopping around right now, basically flat as we speak.
Okay. Guess that makes sense for a neutral rating. I appreciate it, Caroline. Thank you. Let's trade Mr. Scott Bauer, CEO of Prosper Trading Academy, looking at the stock for us. Basically at 150 right now, Scott. Snowflake, landed with such a vigor when it was first trading, and everybody was so excited. And it still moves a lot on earnings, but gone nowhere for the last couple of years.
Yeah, it does move a lot on earnings, and it's at a pretty big inflection point from a technical standpoint. Number one, you've got the 200-day moving average just below where we're trading right now, right around 143. But as you and Caroline were just talking about a couple earnings ago, big gap up. So there is a gap down just below about 10% around 130. So this area between kind of where we're at right now down to 130, pick your spot to me. I think this is a really good opportunity longer term. We've been just kind of going back and forth, and it's pretty complacent right now. One other thing I'm noticing, Oliver, is option implied volatility is actually pretty cheap in here relative to the industry, relative to the market. So this to me is an opportunity to buy some time, to have that advantage of looking for a move. And in my case, it's a move higher, but over time. So what I'm doing is I'm going out to the May expiration. So that, we've got about 6 weeks or so on that, 7 weeks, and I'm buying the 155 call. But to finance that, I'm selling the April expiration, which expires in 2 weeks, the 160 call. This is called a diagonal call spread. So I'm definitely looking for an upside move, but this allows me a lot of time to do it. And the option premium is really not that bad. Yes, it's aggressive. This spread probably costs me right around $4.50 or so, but it gives me a lot of time to be able to roll, sell other options against my long. And again, I really like this because of the 200-day moving average and that big gap below. So there is a lot of support here in this range. And then because the option volatility is on the cheaper side, it allows me to buy time. I'm not going to say completely on sale, but fairly inexpensively.
Okay. So we got something interesting here then for a stock that's been kind of ho-hum.
Yep.
Because you're buying $6 out of the money, so you're pretty bullish on it. That's you're selling the 160, which is nice because there's still some juice in the options, but it's a pretty inherently bullish trade.
It definitely is a bullish trade. It is a bullish trade on direction. It's also a bullish trade on volatility, because if volatility picks up the option premium, that's going to help this position as well. And like I said, I love the flexibility of this, because even if we just stay right here over the next couple of weeks, maybe go down a little, obviously I'd like it to go up here. That gives me the opportunity to sell another option against my long call and lower my cost basis. So it is definitely a bullish trade, but I'm taking advantage of time.
All right. So we'll see, hopefully, Snowflake with a volatile move to the upside, kind of the ideal
That would be
situation.
The holy grail.
Right?
Yes,
yeah.
that would be perfect.
We've seen that happen in these markets, right? People start, for whatever reason, the market rips. If we break out through this range of uncertainty and people start ripping calls, you can see vol get a VIX up, stocks up situation.
Sure.
Which doesn't happen too often.
It doesn't happen often, but you know what? Anything can happen in this marketplace.
Right. I mean, look, we've been talking all morning. Give me your hot take, Scott. Anything under 25% across the board for tariffs? Should the market be ripping on that?
I don't think that we're going to see a big downdraft unless that number is well beyond that 25%. I think that is priced in. And so any kind of deal that's made, which I would expect between now and 4:30 Eastern time when this announcement is made today, there's going to be a lot of changes on the backside here. There's going to be a lot of deals made. I actually think, I don't want to say this is going to be a nothing burger, but the uncertainty, the anticipation going into this, I think the market is going to level off afterwards.
All right. Scott Bauer, good stuff. Thanks for the trade. Thanks for the thought.